Good morning. I'm Pete Najarian, and this is The Take on a Monday morning. Well, we're into May. I got my lime green on, Lyme Awareness Month for Lyme disease, and trying to highlight that as much as possible along with my wife. But as we look at the markets last week, what was the real pressure? Well, bell to bell on Friday, there was pressure on the markets, and it was really pushing to the downside and all kinds of pressure. And it looked like earnings were being trumped by Trump and China, and the conversations about what some of the reaction might be because of this pandemic, what was not disclosed, all the rest of that. Well, what does that really mean? Well, the dislocation of the markets continues, and the NASDAQ really, which had been so much an outperformer, and you talk about the big five all the time, but the NASDAQ performance actually down the most, down 3.6% on the day. And then you have the S&P down about 3%. Throw in the Dow, down a little bit less, but still about 2.5%, maybe a little bit more. And the tariff talks, all of this various conversation that was going on in terms of China, that really was weighing on the markets, and really weighing on the markets in a lot of different ways. It looked like the industrials really had a lot of pressure on them. You look at Dow down about 7%, looking at Boeing down close to 5%. Airlines, cruise ships, they were under pressure. Chips, which has been an area where we've seen a lot of light, but not so much of late, and we've seen a little bit of pressure coming there as well. They were under pressure. Tesla was under pressure. Tesla was down 10%. So the high beta names in energy as well. You look at something like an Apache, a lot of pressure. So where were we seeing anything that looked of anything of maybe a positive that we could take away? Well, Clorox, Apple, after the earnings and all the rest. Netflix kind of hanging in there. Some of those gaming stocks kind of hanging in there. But generally, just a big spike in the VIX. And we talked about the VIX and the volatility index itself trading between this 30 and 35 sort of a level. Well, we got up towards 38, 39. And that's a little bit concerning because we had been moving in the right direction in terms of pulling some of that volatility out of the marketplace, people getting a little more comfortable. But let's also be honest, the movements that we have been seeing, the intraday movements that we have been seeing, does warrant something in the volatility to be a little bit higher than we probably were. So we were probably pressed down a little bit more than we should, given the kind of movements we were getting in the marketplace. And so now we're starting to see a little bit of the remnants of that. I'll talk a little bit more about volatility today, but that was going into Friday. We had oil that moved up. It got actually up over 20. You had gold that was clinging towards that 1700 level. But really, the movement in these volatilities, and like I say, when you start getting in yourself about 32, you're getting a 2% move. Something closer to 40, that's where we are today. Probably talking something a little bit closer to about a 2.5% move, because we're sort of right in between there. And 48 would imply about a 3% move every single day. So we're not quite there yet, but we're getting some pretty nice movement today. And markets under pressure right out of the gate once again, similar to what we'd seen on Friday, although a little bit less, a little less pressure. But we've been down as much as over 300 points. We've actually been down about 150 points. And as we moved from the pre-market into the regular market trading, right now I'm looking at a market that's down about 1% or 225 points on the Dow. And the NASDAQ, believe it or not, NASDAQ right now is flat. So significant difference there. Down 1% on the Dow, the NASDAQ. We talk about this dislocation. It works in both directions. It worked on Friday to the downside. Today it's working like it has been most of the time to the upside. And that's a credit to a lot of these various NASDAQ stocks like in the technology space and so forth. So if you look, you will find some of those names that are moving to the upside. The Teslas of the world stand out. Microsoft has been trading in mostly positive territory all day and actually had a nice little move to the upside. So I think the really big news coming into today and what's influencing the markets, probably Warren Buffett, because we all know the Oracle of Omaha and the conversations. He had the annual meeting. That was something that I alluded to on the Take on Friday, was this annual meeting. And we always want to know, and probably more this time around, I think, than almost ever. And the reason I say that is, given the circumstances of in January, the Oracle having about $130 billion in cash, and everybody saying, why isn't that being deployed more? The Oracle's response, well, I just haven't been able to find anything. The Oracle still has not been able to find anything. He's still sitting on a mountain of cash. They had a really poor first quarter because of the fact of the airlines. Well, he'd been in the airlines once, didn't like his experience there. He's in them again, didn't like his experience there, exited completely the airline trade. That put pressure this morning on those airline stocks, but they rallied right off of that. They were down over 13%. and then bang, it just turned and burned to the upside, not into positive territory, but cut that percentage in half almost immediately. Delta, American, United, all these various names that were really getting pummeled to the downside. So that's something that's pretty interesting, I think, in terms of today. Now, the Oracle also talking about time frame. We all know his age, and we also know his partner, Charlie Munger, as well, who was not part of this, which was pretty interesting because this was done virtually this year around. So you just kind of wonder, well, where's Charlie and why wasn't Charlie a part of this? That was never really explained, I don't think, in any great detail, but we didn't find that out. So airlines exited. Cash, still huge positions. The time frame was one other thing that Warren Buffett hit on. And he talked about time frame, and obviously some of that makes a little bit of sense. Jim Cramer today was joking about time frames and how he's a little bit older, so his time frame's different, and he's not as looking out as far and all the rest of that. Well, that's something Warren Buffett, what really stood out for me, though, about Buffett, not only the lengthiness of investments, is the all-in strategy that he talked about as well. And essentially that's what prompted him to completely exit these airline trades, because Warren Buffett was talking about the idea that, hey, look, you're either in or you're out. I don't necessarily agree, but I respect the Oracle, so who am I to disagree with him? But I like trimming. I like doing some of that, but I understand the philosophy of either I'm in, all in, or I'm out. And his movement speaks volumes, and they took a huge hit. They've had a difficult time of late in terms of a lot of the different positionings of this Berkshire have not really been, from a timing perspective, anything that has worked out nearly to the extent that they would like. And by the way, something that I think really stands out is when you look at the Oracle's positions, there are 5 positions that dominate the portfolio. 5. That's pretty amazing. We talk about the big 5 all the time in terms of the NASDAQ. This isn't just NASDAQ stocks. The interesting thing about the big 5 for Berkshire, with about 69% of the investment, is you've got 3 in the financial world: American Express, Wells Fargo. So you've got the financial world, but you also have Coca-Cola, and then sprinkle in there Apple, which is by far the biggest. And you get a sense of what we're talking about here in terms of the positioning that they have as well. Big 5. So very narrow leadership, but there's all that cash. So obviously that cash at some point in the time will start getting deployed. And when they start finding things that are of value, which they have not, that's what we're told, at least up to now, then we'll probably see a much more diversified portfolio than what we're talking about right now. So that's going to be something pretty interesting. I mentioned volatility. Volatility really pushing hard towards 40. As a matter of fact, I'm looking at it right now, 38.5. It's been in the 39s, pushing towards 40, up about 6% earlier today. Now it's up about 3.5% in terms of the VIX. It's still early in the session, not even 90 minutes deep into the trading day yet. Now, the other aspect of the markets outside of just trading the options world, I think, is what Mike Wilson had to say. Now, Mike Wilson, Morgan Stanley, has done an unbelievable job, I think, in terms of his interpretation of where the markets were, where they are, and where they're going. And right now, Mike's referring to the present stage as a pause to refresh. Now, Mike, almost exactly a year ago, came to Minneapolis, spoke to a group of folks from Morgan Stanley, and gave them a very blunt picture of what he was seeing in the markets. And boy, has that played out. Not perfectly, but amazingly close. And obviously, when Mike was talking about recessions, everything else, none of us knew anything about this pandemic. But since the pandemic, Mike has also been very, very solid in terms of what he's been seeing in the markets and why. And so he's talking about this pause that will refresh, talked about the S&P 500, that 2650 being a 200-day moving average. It should be defended very, very strongly. And one of the other things that I haven't heard a lot of the other folks talking about, but stood out for me, was that those that maintain a dividend. We know this earnings season, we are seeing dividends being cut. We're seeing buybacks being cut or reduced, all types of different actions. Mike's one of the things that stood out for me was him talking today, actually, about those that maintain the dividend, they're going to outperform. So it's just food for thought, something to think about. I think there's all kinds of things and interpretations from each and every one of these very, very sharp men all over, and women all over in the financial big macro world, with some of their thoughts and ideas about the markets themselves. But I think Mike Wilson, I really, for a while now, I think that Mike has really been spot on. So I continue to listen very closely and look for every article that I can find in terms of anything that Mike's putting out there. So I got an unusual for you. We had talked about unusual all the time. Here we are down about 220 points. Energy stocks have been trading, and we've talked about this time and time again. Today, the energy stocks trading a little bit better than you might expect or whatever, all given the big backdrop of everything. But there's an area, the uranium trade has been something really interesting. And we've seen this time and time again. And lately, we've seen it a little bit more frequent. And I'm looking at Cameco, which is CCJ, huge buyer today. They're buying 20,000 of the June 12 calls. Again, really short duration, right? We talk about this all the time. 1 week out, 2 week out. Well, this is going out to June, so you are getting 2 months, but that just gives you another idea of these short duration trades. So 20,000 of the June 12 calls getting bought today. They're getting rolled up, and they're going for about 47 cents. That stood out to me because the size of the trade, the dollar amount of the trade, the trades that have been working, because if you take a look at the charts, this stock has just been chopping wood on the way to the upside, especially off the lows, but a nice, steady move to the upside. They're buying a little bit of time here. So this one stood out for me just as the highlight, just to say, hey, look, we're all looking around. We're all trying to see all sorts of different unusual option activities. This one stood out for me today. I thought this was a pretty interesting trade. Anyway, folks, understand the derivatives world. Understand what that really means, all the pricing, all of the different Greeks, everything that goes into all these options. Market Rebellion is one of the great places for that. We got great folks who are mentors who do an outstanding job educating and all the rest of that. That's part of what we're doing here, and also trying to just highlight and give you some ideas of what we're seeing in the marketplace each and every day. Have a great morning for you, and I'll tell you, you will see me on noon today. I'll be on the halftime report with Scott Wapner and the crew. Take care.